What is going on, investors? Back again. Time to take a look at a very popular EV stock, and that is NIO, ticker symbol NIO. Over the last year, stock's just up 1,133%. Holy cow. But look, year to date, this thing has slid 15.49%. When we get over the stock chart, we'll obviously see evidence of this slide down. We've talked about it here on the channel. This is a stock that we've reviewed for, I think, about a year now. We've been looking at this thing, and here it is. Okay, so we'll talk about where it is right now. We'll talk about, is this a buying opportunity? Can you buy NIO? Can we experience this phenomenal growth that we've had over the last year? Get back to that type of performance with this stock. We got a 67 billion with a B market cap on that one. That is a hefty market cap. So they just reported their earnings. They did beat by 95 cents. They beat on revenue. I think that's kind of irrelevant. Okay. Honestly, I think some of that is irrelevant because when you're talking about a young EV stock like this, you're talking about deliveries. You're talking about getting cars on the road. And that is what this company is doing. There's a reason why this stock has rallied 1,000% over the last year. Part of it is just the overall froth of the market. But look, this company is delivering, and so to speak, okay? Here we go. Key operating results. We've got the deliveries of these cars. They make several cars. Look, on this channel, we go over the numbers, the financials, the stock chart. If the quote-unquote stock channel you do is looking more at the car, the engine, the interior, that's like a car review. I am not going to do any of that. To be honest with you, I don't care what any of these cars do. All I care about are the numbers and the money and the profit, and that's what we're going to take a look at. Take a look. Look, it's really good. Q1, look, last year we delivered 3,800 vehicles. Now it's 20,000. Okay, we're seeing similar type of performance growth over the last year. Now, from a quarter-over-quarter basis, we grew from 17 up to 20,000. That is adding on, we'll call that a little over 3,000 vehicles. Now, we grew by about 5,000 vehicles here, 2,000 vehicles here. It's a little lumpy. So I wouldn't put in a lot of stock like quarter-over-quarter growth. Year-over-year growth, it's going to be tough to start lapping some of these comps like 2022 Q1. It might be tough to what is this, like a 6X basically? Are they going to deliver 120,000 vehicles next year? I think that would be a stretch, and it could take a lot of investment in this company. Now, we'll talk about that here in a second. Here's the high level. So we're going to look at NIO from a high level, and then I'll show you just kind of on a more granular level, kind of their revenue and their profit. So here's this company. Now, here's the deal. This is in RMB, which is the local currency that NIO deals with. Forgive me if I say dollars and things like that, but I think by saying this, you'll know what I mean. So we've got these vehicle sales here. We're getting it. Here's Q1. So this is our most recent quarter in this left-hand column. They give you a quarter-over-quarter view, and here's Q1 of 2020, which we know just fantastic growth. We've grown 490% over the last year in terms of vehicle sales. Now, we grew 20% quarter over quarter. Now, vehicle margin, this is an interesting one. We just reviewed Tesla early in the week. They reported on Monday. They are consistently in this low 20% vehicle margin. So here's what I want. This is what we've talked about on previous videos with NIO. They were at a negative margin. So you're basically buying the car for less than what it cost them to make them this time last year. Probably a pretty good deal if you're in the market for a car, right? Now, last year in previous quarter in Q4, which was last year, 17.2% margin on this one. Now we've bumped up to 21.2. Here's my question. How much more margin can NIO squeeze out of the vehicle? Okay, not only because we know what Tesla's margins are, we know what other traditional margins are for other automakers. Okay, low 20% is actually pretty high on the vehicle margin. Can they push this higher, or have we reached peak margin? That would be the first question I would ask, and it's certainly the very first thing I will look at when we get Q2 numbers in about 3 months. Now, look, I don't know enough about supply chain and making cars, whether or not they can push this into the mid to high 20s or even 30s. I think it's going to be difficult because, number one, Tesla cannot do it. And number two, you have all the competition, not just here in America with Tesla, but in China, there are lots and numerous other electronic vehicle makers. So we'll see if they're able to, one, maintain these margins and maybe potentially push them higher. But I think this growth of this vehicle margin, the best days are certainly likely behind NIO, not only NIO, but the whole sector as well. So we got total revenues coming up 480% year over year on a quarter over quarter basis. Again, as we expect sales up 20%, we expect our revenues up 20% as well, since they're getting almost pretty much all their revenue from vehicle sales. Now, from a gross margin perspective, coming in at 19.5%, this is what has me believing these margins are probably about to stabilize, okay? Because we went from 17.2 to 19.5. I would expect that number to probably equalize at some point. Now, loss from operations, big time lost last year. Okay, they were basically selling these cars for less than what they cost to make them. They had an 81% improvement in the most recent quarter, and quarter over quarter they improved by about 68% to be more exact. Our net loss improved by about 67%. So all things being considered, the company is moving in the right direction, but they are not profitable, and we're coming up on the margins likely starting to stabilize. They can probably improve them a little bit, maybe for the next few quarters, but I would expect these margins to likely stabilize given what we know about Tesla. And if these deliveries don't continue to accelerate, that could be a bad mix for NIO. Not necessarily saying that's what's going to happen. I'm just letting you know what other investors are thinking. Okay, if you're super bullish NIO, it is actually important for you to understand what the bear case is. Look, this stock is down, 15% this year. I mean, it was at 66 and now we're trading here at 38. And in fact, it's trading down here not only today, but in the after hours as well. So it's important to understand why this move is in there. And it could be that just investors are anticipating, look, this is a company that is likely not going to be able to expand margins. And if they cannot continue to expand sales at the rate that they have, well, they could hit their head against some growth. The other thing that we know is that Tesla had to raise money numerous times. In fact, Tesla was raising money as late as last year. And that's like Tesla's 10th, 15th year in business. So we'd expect NIO to continue to have to raise money. How are they going to raise money? Probably by selling the shares, issuing more shares. So you as a common shareholder are going to be diluted in that sense. Now, what I want to show you here is a more granular level of these revenues. So we got our revenues here. We got our vehicle sales here. These left-hand columns, so our March, this is last year in March. This is this year in March. So we kind of straddle these columns. These are in the Chinese currency. Okay, in the middle column is our previous quarter. So we've got the most recent quarter here in the third column. Middle column is our previous quarter. Left-hand column is last year. And the right-hand column is the most recent quarter, but in United States dollars. So this is as written. You got 1.1 billion. Is it in thousands? Yeah. So we got $1.1 billion worth of vehicle sales. That's impressive because you factor in how long it took like a Tesla to get to $1 billion in sales. Guarantee you NIO got there way faster. Okay, so we've got our total revenues coming in at 1.2. Okay, and we're seeing quarter over quarter, yes, we're seeing growth, but it's not as explosive as we've seen obviously year over year. So NIO's going to come into some tough comps, okay? This time next year, this time next quarter, they're going to come into harder and harder comps to kind of lap these sales numbers that they've put up. It's going to be difficult for these companies to meet that expectation. Not only that, you had the stock rally over 1,000% over the last year. So those are things investors are certainly weighing on. Now, we've got the cost of sales here. We've got our vehicle sales. They are profitable on a per vehicle basis. We saw that last year at this time, they weren't. They spent 1.3 to make 1.25. So they're basically selling the cars less than what it cost them to make. Now that's not the case. They spent we'll call that 5.8 to make 7.4. So they are making profitable margins, which we saw basically on the first slide. Our total cost are rising. Okay. Obviously you got rising sales. You're going to have rising cost as well. and it's coming in at 6.4 when in the last quarter we were at 5.5. Now, we've got other expenses as well, R&D, selling, general, administrative, and some other expenses as well. You kind of want to see, are these stabilizing? And the answer to that, at least over the last 2 quarters, is yes. Take a look. R&D actually went down in the most recent quarter. Selling, general, administrative essentially flat, if not down just slightly. And so they have some other operating profit here. It's basically a rounding error. It's not something that we're going to pay attention too much to. So we've got total operating expenses actually down quarter over quarter, and actually relatively flat, just up about 400 million over the last year. This is a very good sign. This is a very positive sign. It is showing that this company, in my opinion, is very well run. Whoever's running this company, running the operations, is actually doing a really nice job, because they're growing these revenues very rapidly, but they're not expanding expenses nearly as much as you'd actually expect. So you've got total operating expenses coming at 282 million. That's in United States dollars. You've got this loss from operations. So you have this 1.2 in terms of revenue. And then you've got total cost of sales coming down here at 981. That gives you a gross profit of 237. We minus off these other expenses coming in at 282. That gives us a loss from operations. This is in United States dollars of $45 million. Now, how does that compare in the Chinese currency? We were at negative 931 in December, and now we're at negative 295. So it's actually really improved. And last year we were at negative 1.5. So we were way higher. Okay. So this is moving in the right direction. I like what I'm seeing here, but here's the deal. Is investors are not really liking what they're seeing, right? Because this stock since February has really been on a free fall. Like I said, back in February, this stock was at 64. They're starting to print good numbers on the delivery side. They're starting to show that they can control expenses. They're increasing margins. They're very, very close to being a profitable company. And look, investors don't give a darn. Okay, so what that should be an alarm bell for you as an investor that says, oh, I'm super long NIO. This thing's up 1,000% over the last year. It's going to rocket to the moon. This thing's going to be 100, 200. I see that, the predictions all the time. This thing's going to be $100 stock. Well, if we 3x this stock, look, you've got $180, $200 billion market cap on this. I don't know. That, in my opinion, would definitely be a stretch of the imagination, and they would certainly do a lot of fundraising on the way up. So you could get diluted out of that position. So, but anyways, here we go. We've basically consolidated. Okay, this stock bottomed out down here at 31, more specifically maybe right here at 34. I have my line in here at 34, kind of rallied up to 46, came back to 34. Now, what's concerning is we made a high here. We made a lower high here. Now we've come up here and we kind of broke above it. Now that was a bullish sign, but we got rejected. And now we're trading back here at 38, right here on a trend line, right where we bottomed out back here, right about where we bottomed out here. It's acted as some resistance and some support along here. 38 as a level where I tell you what, I have my rock bottom level on this one at 34. Okay, 34 obviously over the last few months has been a spot to buy this stock. 38 is just a couple bucks up above it. So if you are a long-term believer, you believe in this stock, this is potentially a level where you can buy this stock right around that $38 per share. And certainly if you think it's going to be 100 by the end of the year or next year or 2 years from now, well, what does it matter about $2, $3, $4 on your share price? Now you've got this moving average distinctly negative, and it is going to, you've got a double whammy of resistance on the way up. Okay. When you have these moving averages that are moving down, it's as you can see over the last 3 or 4 trading days, this stock has tested this moving average and just continued to get pushed. I mean, think about this as like a weight like above the stock that just keeps pushing it down, pushing it down. That's what this moving average does. You've got this other line here, which I have marked out at 44. 44 is kind of a line in the sand on this stock as well. Maybe even a little lower than that at 43 is where sellers have just stepped in over the last few months, 2 months or so with this stock. So in the shorter term, I'm probably a little bearish on this one. I think it could come down. I think it could come down further. If you have a large market correction, which lots of people and lots of talking heads and lots of people think we're overdue for, certainly if you look at the stock charts of some stocks, they're certainly due for some kind of correction. A stock like this is going to get absolutely obliterated. Okay, we saw when the market, I mean, this move here from 64 down to 34, that is $30 off the share price. Okay. That is a gigantic drawdown in a stock like this. Okay. If we have another market pullback at some point, whether it's interest rates, whether it's inflation, whether it's higher taxes, it doesn't matter what it is. A stock like this is just going to get absolutely obliterated. Okay. And if you break this 34 level, well, I tell you what, the 20s are back in play in a major way with NIO. So wouldn't necessarily think things are safe, even if you start seeing a bounce here at 34. So hopefully I give you some options with this. Look, I like this company. I like what they're doing. It's probably it's definitely overvalued at $67 billion. This stock has had just a monster run. Okay, even with this pullback, it's still up 1,000%. Stocks like this have to take a breather. And so if you can consolidate sideways, the worst case scenario is you get a broad market pullback and this thing crashes, because this thing will crash if you have a broad market pullback. So you got to cross your finger and hope to die that that doesn't happen. The best thing that can happen with NIO is you chop sideways from 34 up to about 44 on this one. You chop sideways for a while, you turn this moving average flat, get it going positive, then you get some momentum on this one, and then you break above 44 on some volume, and you're coming back to 48, 54, 56, potentially back up to 60 on this one. Okay. But you need some momentum behind the stock, and what's going to drive that? I don't know. I don't know at the current moment. With chip shortages, with competition in this space, those types of things might be somewhat difficult for NIO to turn things around, at least in the shorter term. On top of that, when you have this monster of a move, stocks just like to take a breath for a extended period of time. Could be several months before this one resumes an uptrend. We'll see what happens with NIO. Let me know down in the comments below what you think. We'll be back again with more videos soon. Good luck with your investments.